covered call tutorials from Market Chameleon. This is what we're doing today. We're going to use the covered call screener. Now I assume you know what covered call is, but if you're not, you are basically have a sideway or slightly bullish market outlook, depends on the stock. But just so you know, a covered calls means you own 100 shares of a stock. Let's say Apple, just for the example, you own 100 shares of Apple. Price is, let's say, $220, so you owe 100 shares. And you think we are at all-time high, and then you want to cash out because you bought, I don't know, months or years ago. So you sell a call. Let's say you sell out of the money 230 calls for $1. Just for the example, rough numbers, simple numbers. You sell the 230 calls for $1. You collect extra $1, but you have 100 shares, meaning you collected $100 extra, and you win three ways in this specific trade. You win three ways. If Apple stays the same, 220, you win because you keep the $100 that you just collected by selling the call premium option. If Apple goes down to 215 to 200, doesn't matter because you sold 230. It's out of the money, expire worthless. You still keep $100. And if the stock price of Apple goes from 220 to almost 230, 229.99 by expiration, let's say, you still win. And those are the three ways to win, which is pretty popular strategy. A lot of people use it. Evaluate investment opportunities to sell core options to gain additional premium against an existing long stock position. Now the beauty of Market Chameleon is that they find you all those covered calls that pay you even extra premium than what you should have got paid based on history. So they, for this specific example, they can find, Market Chameleon can find you a trade that you should have got paid $1, $100, but now you get paid 150. Cause volatility, cause whatever. Okay, so that's the beauty of Market Chameleon. It doesn't tell you if Apple will go to 230. It just tells you, hey, there's this covered call 230. For example, we're gonna go over the filters, and that is now worth $150. But based on history, you should have got paid 100. So this is why I like Market Chameleon. 7 days, link below. Let's read the disclaimer and then go over all those filters. Okay. So know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And my name is Ziv, also known as Finance After 40. Now with that being said, let's start with Market Chameleon covered calls. I assume you have a membership or you're in the 7 days trial. You're going to click here to get to this screen. Go to screeners, and in here, click on covered calls. Next week, we're probably going to do one of my favorite trading strategy, naked puts, but this is, I do it on Tasty Trade lately. Not Robinhood. No, Robinhood, I don't think they let you do this. I tried, I don't know, like a year ago, they didn't let me. I moved to Tasty like 2 months ago. It's awesome. It's absolutely awesome, not a financial advice. So click on covered calls, okay? And in here, we got, just so you know, we got 381 pages right here. It's too much. I like to do a couple of things. I like for this specific, basically, for this specific screener, we did in the last video, we went over Market Chameleon preset of covered call bid stocks only. So now I want to do a little difference. So let's go here. First of all, expiration. If I go farther out of the money, yes, the stock has a lot of more time to go up or down. But instead of just the default of September 20, which is next 7 days, I want to go farther so I can collect more premium. So instead of the next a week from now, I'm going to change to the next 30 to 60 days. So that's going to change some stuff. First of all, we've done that. We went down from, I don't know, 400 page. Okay, we went up. So let's keep going. I like from all those stuff, moneyness. This is the most important, not the most important, very important to me. Moneyness, distance from stock. Make life simple to you. Let's read what it says. It says the difference between the strike price and the stock price as a percentage of stock price. For example, the stock price is 110 and the stock price is 100. This would be a 10% out of the money. If the strike is 95, that would be negative minus 5%. Meaning the more positive number, the more out of the money the call is that you sell. You collect the premium, and basically the stock needs to go up. You also make money because the stock went up. So if the stock, let's go back to the Apple case, if you have 100 shares, that's $22,000 at the price of 220, and it goes up to 230 and you sell your shares, 230 and a penny, for example. You collected the premium of the $1 or $1.50, depends on what you found, but you also collect extra $1,000 because now Apple is at 230, so that's another $1,000 from 22,000 to 23,000. Something to consider. So you can do all of these filters, and feel free to comment below and tell me, hey, these are the filters that I've done. This is the stocks that I found. Thank you. So I'm gonna go by moneyness, and I'm gonna go in here. You see, I don't like in the money, I don't like at the money, I like out of the money. I'm not gonna do 25% and above because then the income will be less. But let's say I want to sell stocks 10-15% out of the money. Let's start with this. Those are free filters that you can play. This is interesting. We might do another video and play with those, but let's just start and see solid things. So if your stock goes up by 5 to 15%, let's see what we can find. You can sell for extra premium based on history. So now we went from a lot of pages to 259. Still a lot, but at the end of the day, I like to go by a market cap. So we're gonna go market cap and basically money distance from stock. Okay, so we got all those apples. So let's see what we got. My focus is a couple of things when I see all of this. My focus is the market cap, which means stocks that I know, stocks that you know. You see here Apple, you got Microsoft, and this is just page 1. You can go on, but if I go by here, let's see something that's like over 10%. You see here, so we got Apple, anything on Microsoft. Yeah, Microsoft also plus 12%, plus 13, plus 10.9. Let's start with Apple. Everyone knows Apple. This is 12% out of the money, but look at this. This is for November, and it says earning. Okay, so that's another thing to consider. While you can sell the covered calls for November 1st, it tells you the earnings is October 25, a week before. Basically, we're already starting the next earnings season. That is crazy how time flies. But basically, you can, if you don't wanna wait for earnings, maybe close this call at the one day before or on the day of earnings, because usually they post earnings after hours, something like that. But what does it tells you? Look at this. Price today 223, and it tells you the covered call is 250. You sell the 250 calls and you collect $74. You see, call bid $74. What's wrong with that? If Apple goes to 250 from 223 by expiration, great. I'm happy to sell my Apple calls 100 shares instead of 22,000 to sell at 25,000. So that's extra almost $3,000, 2,800 roughly, plus the income. Your break even is 250.74, and if Apple is below that number, great, you are a happy camper. And let's see what else. Like that's actually a good covered call, not gonna lie. That's a good covered call, not a financial advice. We got let's see what else we got. Returning flat, observation 87 times based on history. Market Chameleon went back and check this check this strike. Covered call win rate 58.6%. It's above 50. It's okay. Covered call average return 2.1%. Stock only win rate 57%. stock only average return 2%. So Apple needs to go up 12% for you to sell Apple at 250. And if Apple goes another 12% from here, that means the market cap is 3.8 trillion or something like that. Maybe that's a good time to cash out for now and then wait for the election and all that stuff. Not a financial advice, not telling you what to do. So that's one option. Collect $73 in the process. You can also say, you know what, I'm gonna go the highest amount. I'm gonna go, but I'm gonna collect $390 on Apple. I'm gonna sell the 235 calls also for November, and remember the earnings. It's up to you. And then your break even is 235 plus this. It's like 239, something like that. Apple is at 223. You still have 5.3% distance just to break even. It's pretty good. If you don't want to wait until November, you can collect $208 in here for October 18 and sell the 235 covered calls. Collect $200. Your break even is 237.08. If you're happy with that, great. If it gets there, and you can always close the trade if it gets close to your strike, or roll it over for next month, and so on and so forth. And this one actually has almost 65% win rate. Just buy the stock versus the 61%. It's all green, it's all positive. So that's something on Apple. Let's move on to Microsoft. Same deal. Price today $428. I remember a month ago when it was below 400, and now everything is at all-time high again. Let's see. Earnings already. Wow, we're already back in earnings seasons in October. That's crazy. So it says earnings on the 22. Let's see what we got. We got 12% in here, 8.5% in here. This is good. I like this one because let's go like safe. Let's go safe. Okay, just like the Apple one, safe. It is option. Nothing is safe. 12% out of the money. Look at this. If you have 100 shares of Microsoft, yes, it's expensive. It's $40,000, $43,000 for October 25. Okay, October 25, which is basically like a couple of days after earnings. You can sell the 480, which is 480. That is crazy. One from here. It's like 15% from here, 12%. Collect $110. Okay, that is this the delta, I assume 0.8. That's delta 8. That's super. Like your odds are good. At the end of the day, your odds are good. Basically what it means. If you don't want to play earnings, but you still want to collect income, this is an interesting one. See here for October 18. Remember, the earnings is on 22, October 18, and price is 428. You sell the 470 covered calls. Collect $100. What's wrong with that? Nothing is wrong with that. And you are still 9.7% out of the money. Now, of course, if you want to collect more income and you want to get closer, you can sell the 450. But again, we are at 428. Anything can happen. But here you collect almost $600 for this expiration. And maybe with time decay and all that, maybe it will go down and collect like 80% of the income, get out. Or if you want to offload 100 shares of Microsoft that you have, or even more, then 450 is a good price for you in your head. That you collect another $600, then basically your break even is like almost 456, something like that. Something to consider. There's a lot of pros and cons the farther or closer to the money that you go. So this is basically how I use Market Chameleon covered call screener. You can do it by yourself, 7 days trial. I wish you a good weekend and hope this was valuable, and I'll see you in the next one.